Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah. It's Monday morning and you're watching IndianOpen. Let's go straight to the headlines. It's a cautious start to the week for Asian equities as focus shift to central bankers from across the world and corporate earnings. The petrochemicals business helped Reliance Industries beat analyst estimates in the first quarter. More provisioning in MTM losses takes a toll on ICICI Bank's bottom line, leading to the lenders posting its first quarterly loss since 2001. And women's clothes maker TCNS lists on the exchanges today. First, let's take a stock of what's happening in the world, what's happened in the world markets. So Friday saw some bit of pullback for the NASDAQ, Twitter and a few other companies, and the numbers and the reaction thereof that came about on a bunch of these tech earnings led to the NASDAQ ending over 1.5% lower. The Dow and the S&P relatively muted, but the Dow still losing about 0.5%. Europe had a flattish close as well, and I think all of that's led to the Asian market starting off on a mixed trend but with a cautious note. So Nikkei is down about 0.5%, Hang Seng down about 0.25%, Shanghai may be up about 0.5%, and the SGX Nifty indicates a flat start to the trade today. So promises to be a mildly dull day of trade, maybe with a small bit of negative bias as well, and that would probably in large portion depend on what happens to the European markets and the US markets. However, our markets had a fabulous last week, didn't we? So the GST cuts, earnings, the global market sentiment, all of that aiding the index and leading the index to scale new highs for itself. What could happen today? That's the key question. Now, there's a positive surprise that we've seen from Reliance Industries. Post-market hours, we saw a fairly strong set of numbers, not just from Reliance Industries core, but Jio numbers also look very, very promising. All of that augurs well for Reliance as a stock. That's a heavyweight. ICICI Bank could see a likely uptick as well, because while the numbers optically seemed slightly off the cuff, I think brokerages were enthused by the fact that the core PPOP was driven by NII and fees, and despite the loss, the CET1 was stable. We'll talk about this in greater detail on First Word as well, but likely positive upticks by both ICICI Bank as well as Reliance Industries should only aid sentiment in the session today. And HDFC AMC, the less we talk about it, whatever we talk about it, less said really. I think the IPO figures out there show the appetite for quality at almost any price. QIB 192 times, HNI 195 times, overall 83 times. This is not a tiny toon issue. Yes, it's not a QIP offering by HDFC Bank, which incidentally might come tomorrow as well. But still, 83 times for a company of that size, a sector that is just starting to get created, and an issue that arguably came at a slight premium, shows that if you're giving quality, the market is ready to absorb it at almost any given price. So good subscription numbers. Well, let's see. Until the listing, this should be an interesting one to monitor as well. What should we watch today, though? That's the key question. During the course of the day, if ICICI Bank has done what it has done, I think the expectations from Axis Bank therefore go up. So watch out for that one. Interesting numbers, set of numbers to watch out for. HDFC, I think the last couple of quarters, they've maybe missed a trick or two, but you never know with this stable. You're always in for a positive surprise amidst the steady state of numbers anticipated. So watch out for that. And then the fifth largest company by market cap and, of course, revenue figures as well in the IT space, Tech Mahindra comes out. So there are three index names to watch out for, but a clutch of non-index large caps, and all of which again qualify at that quality at any price kind of multiple. So Avenue Supermarts comes out, and that's something to watch out for. In that, then there is of course Century Textiles and Escorts. Then the next set has Godrej Consumer Products, which I thought again qualifies about the kind of premium that people are willing to pay. Interglobe Aviation almost at lows, fresh 52-week lows for itself. Interesting set of numbers to monitor, as is JP Associates because of Rakesh Jhunjhunwala's recent investment. Oberoi Realty and Piramal Enterprises as well as Shree Cement. Also a very important sets of numbers to watch out for, all three. So do watch out for these names in the session today. However, What to watch out for at 9:15 a.m. That's the key thing, isn't it? Something that we talk about almost every single day at this time. So firstly, I think I'll watch out for Reliance Industries, and Amit will just dwell on this in just moments from now, so I won't take too much time. But Nomura was the note exemplified what Reliance results meant. Almost everybody said that the numbers are strong. Petchem, Geo, retail, all of them only got better. Petchem probably was the driving force, but the Geo numbers too look fairly promising. So Reliance Industries, important one to monitor, likely to start off high today. Persistent Systems, I thought, was an interesting set of numbers. They've kind of last quarter brought down the expectations from this stock in a meaningful way. The revenues were up, profits were up about 18%. EBIT margins bounced back quite strongly, though I think in part people anticipated these numbers, so don't quite know how strong the reaction would be, but the quarter was very impressive. Ramkrishna Forgings, I thought the quarter was really impressive. Net sales up 60%. Margins moving up for that business, for the margins to move up 250 basis points takes something. The profit was up 2x at 27 crores versus 9 crores. Yes, it's had a subdued last few quarters, but this quarter was impressive. I think the commentary in part on the exchanges and the releases seemed impressive too. Likely to react positively today, Ramkrishna Forgings. We might have a bit of a negative reaction for Pioneer Distilleries. They have received an order from the Maharashtra Pollution Control Board to stop all manufacturing activity at one of the units. Might have a negative impact. Last but not the least, and Shraddha will speak in greater detail, but the Morgan Stanley note kind of says something about ICICI Bank. It's likely to start off higher today because almost everybody believed that while there was a reported loss, the core numbers were good. For Morgan Stanley, it's their top pick in the banking space. That they are overweight. The target price is 425. Let's wait and watch if ICICI Bank will start off higher. Let's wait and watch if it moves up further from those levels or no. However, I think this is the clutch of names that we're going to talk about on First Word because these are the most important stories for the day today. So today on First Word, Amit will take us through Reliance Industries numbers to show how the Petchem division remains the company's warhorse. Shraddha tells us what led to ICICI Bank's first quarterly loss since at least 2001. But what were the green shoots in those numbers? Agam then joins in to wrap up the first quarter performance of the top 4 IT companies in the country. Remember, HCL Tech is now the third largest, pipping Wipro. And then we get you a glimpse of just some of the stock ideas discussed at the Alpha Ideas 2020 meet on Saturday. So, well, if you missed it on Saturday, you'll see it today on First Word. However, let's start off with the big boy, Reliance Industries. Banked on its petrochemicals business to see it through in the first quarter. The refining telecom giant beat street estimates with its last capex spend starting to pay dividends. Amit Sarkar is here to take us through what stood out from Reliance June quarter numbers. Amit, if pre-numbers it was all about Geo, and arguably Geo did well, but Petchem raised its hands to say that, hey, I'm right here.
Yeah, actually it did. Now, but I'll start off with the gross refining margins of Reliance Industries. Now, if you see in this quarter, Reliance Industries gross refining margins stood at $10.5 per barrel. Now, this is lower compared to the last quarter, but that is because the Asian benchmark, that is the Singapore gross refining margin, that averaged lower at around $6 per barrel versus $7 per barrel in the last quarter. And that was because of the high exports that we had seen from China of the refined products. Now, despite this weaker GRMs, of the global weaker GRMs, Reliance Industries GRMs premium to the Singapore gross refining margin. Now that expanded to $4.5 per barrel on the back of the ethane imports, ramping up the new plants, and because of the robust crude sourcing that we have seen from Reliance Industries in the past quarters. Also, this is the 14th consecutive quarter where the company has maintained a double-digit gross refining margin. So this was the first thing that stood out in the earnings. Second was the Petchem business, as you just said. Revenue from the Petchem business increased around 6%, while the EBIT jumped 22% on the back of higher spreads and stronger volumes. EBIT margins expanded by 260 basis points on the back of the ethane imports and because of using of the petcoke and because of the using of the gases from the own petcoke gasification plant. And if you see this chart clearly shows you how the Petchem business has been important for Reliance Industries and how it has been gaining more traction. Now, in the first quarter of financial year 2019, the Petchem business contributed nearly half of the consolidated EBIT of Reliance Industries, and this has been rising for the Reliance Industries. In the last year, it contributed nearly 35%, and in this quarter, it has increased to 50%. So this shows how the Petchem business of Reliance Industries has been growing. Last, it is the retail business. Now, if you see, though retail business contributes only 6-7% of the consolidated EBIT of Reliance Industries, but the growth rate of this business has been stellar. Now, retail segment's EBIT has seen a triple-digit growth rate for the 4th consecutive quarter. In Q2 FY18 compared to last year, it grew 106%, followed by a growth of 111%. In Q4, that is last year, it grew 291%, and in this quarter compared to last year, the retail segment's EBIT has grown 266%, and this is because of the store expansion plans of the company. So these are the three things that stood out on the other businesses of Reliance Industries.
Interesting. And if you just look at it, retail has stiff competition. The next piece that we talk about is stiff competition. Petchem, in a manner of speaking, is that strong suit, 50% to EBIT. That's quite something. Having said that, Amit, before the consolidated numbers or the standalone numbers came out, we first got a glimpse of what Jio numbers were like. And what did you make of it? I was surprised with the ARPU numbers.
So for Reliance Jio in the first quarter, the ARPU was close to 135 rupees. Now, if you see, it has fallen for the 3rd consecutive quarter, but it is still way above the analyst estimates. Now, analysts were estimating this number to be around 125 to 127 rupees, but the reported ARPU came in at 135 rupees. Now, 3 reasons why the ARPU beating the analyst estimates. Now, first is as against the analyst estimates, most number of, that is 88 to 90% of Jio phone users, according to the company, is on the 153 plan. Now this is one of the reasons why the ARPU was higher for the company, because people were expecting most number of users to be on the 49 rupees plan, but 88 to 90% are on 153 rupees plan. Second, 3 to 4% of the total subscriber base of Reliance Jio is on the higher ARPU plan, that is the 779 rupees plan, and this is what is also pulling the ARPU northwards for the company. And lastly, it was the more video consumption, and because of which there was higher add-on recharges that was seen. Now the video consumption increased because of the IPL and the Football World Cup, because of which there were more add-on recharges, and because of which the ARPU of the company was higher at 135 rupees. Now, other key takeaways from the Reliance Jio earnings was, firstly, the postpaid plan, which was given a push in this quarter, has got nearly 4 million subscribers. That is nearly 2% of the total subscriber base of Reliance Jio. Capital expenditure for Reliance Jio in the first quarter was 17,000 crore rupees. Now this is double of what Bharti Airtel spent in the first quarter. Now the total debt of Reliance Jio in the first quarter was, at the end of the first quarter, was close to 1,48,000 crore rupees. Now this is 61% of the Reliance Industries consolidated debt. So you can see how Reliance Jio has been more important now for Reliance Industries. Now the churn ratio on the performance side, if you see, the churn rate was the lowest in the industry at 0.3%, while the data usage per customer per month has increased to 10.6 GB for Reliance Industries, for Reliance Jio now.
Well, very interesting. I was at a phone store this weekend, Amit, and there were a bunch of people who were coming in for portability and taking the phones of Rel Jio. So the demand seems to be real. However, having put all of this into perspective, what have brokerages made of this note? What are they saying? Will Reliance react positively today? Are dealers saying that? And two, has any of the major brokerage upped their target prices post these numbers?
So most of the brokerages have maintained their stance on Reliance Industries. Some of them have increased their target price. Like I saw for Edelweiss has increased the target price of by around 100 to 150 rupees. JP Morgan by only 50 rupees. So it has been a mixed view on that. But most of them have maintained their stance, and some of them have increased the target price on the back of the robust petchem business, the steady ARPUs that the Jio business has been seeing, surge of the retail business, and on the possibility that the company might generate free cash flow in financial year 2019. So on the back of these reasons, most of the brokerages have maintained their stance and have increased or somewhat kept their target price at the same level.
Okay, we'll watch out for these. I mean, the data there on the website and on our Twitter timeline as well. But Amit, thanks for putting this into perspective. Gives us a slice of what Reliance Jio did. Now, if Reliance was as important today, ICICI Bank would be as important too. While it's unexpectedly reported a loss in the first quarter, largely because of the private lender decided to increase the provisions, the question mark is about the silver lining, and which is the improvement in the asset quality. Now, Shraddha Babala is standing by to explain the numbers and how should you look at those numbers. Shraddha, good morning. Optically, the loss may sound befuddling, but there were some green shoots in those numbers, I thought.
That's right. But let me just start off by explaining the loss number, Neeraj, and that was largely on account of the big provisioning number that came in during this quarter as well. So a net loss of 120 crores for the quarter. This is despite the stake sale gains of about 1,100 crores coming in from the 2% that they sold in ICICI Prudential Life Insurance. Similar was the case in the previous quarter, where they had sold stake in ICICI Securities, and that had helped the bank to report a net profit during that quarter. But this time around, despite that higher other income component, we did finally see a net loss. So that's because provisions came in at 5,900 crores. What led to such higher provisions? A couple of interesting aspects. One, they took a mark-to-market loss of 218 crores entirely in this quarter instead of spreading it over the 4 quarters as allowed by RBI. They also made incremental provisions of 700 crores towards NCLT accounts, and then another 248 crores towards fraud accounts that they had recognized in the previous quarter, and they had debited that to reserves and surplus. So now they have credited that back, and now you have them flowing into the P&L in this quarter. That apart, you also had the bank consciously taking a decision to increase the provision coverage ratio by as much as 560 basis points sequentially to 66%, and that is seen as a positive. Overall, if you look at, that's a provision picture. If you look at the operating performance as well, the core operating profit growth came in at 17%. That's the highest since Q1 FY16. Even the bad loan formation seems to have stabilized. If you look at the asset quality numbers, you saw that the gross NPA reduced from 9.9% to 9.65. So there was a marginal improvement here. Even if you look at the slippages number, that has come down sharply sequentially from 15,000 crores to 4,000 crores. This, of course, was on account of the RBI circular, and it has gone back to normalized levels of about 4,500 crores that we had seen even pre the March ended quarter. So that seems to have allayed some fears. Even if you look at the business momentum, that continued. Retail loans now comprise about 58% of the book, which is a positive, and the loan growth came in at 11.3%. That's an 8-quarter high. That apart, if we move on, what else contributed was in the con call, Sandeep Bakshi, the newly appointed CEO's comments. He did address some of the key issues that we've been hearing about for ICICI Bank. He said that the bank has voluntarily complied with all requests that they've received from the US regulator. So after SEBI, you also have US SEC, which was said to be inquiring into the Chanda Kochar case. And finally, also on the report on incorrect asset classification of 31 bad loan accounts, they said that the report, which was submitted by the committee, suggests that there is no material impact on FY18 financials, so that allayed fears to some extent. So Neeraj, overall, well, it is a net loss, but it is seen as a positive because they've increased their provision coverage ratio in the quarter. And of course, if you look at the way ADRs ended 4.5% higher, clearly it's going to be a positive start in trade at least.
And you would believe that's justified as well. The numbers did have some green shoots.
They did. There's no reason to expect another net loss. It's done, and it's this entire balance sheet cleanup which will continue and continue to drive the stock. And then you also have this entire valuation picture which the brokerages have spoken about. So what have they valuations said? Seem demanding, and that's the reason.
So what have they said? What have brokerages said?
Right. So I'm going to start off with one of them, Kotak, which said that it continues to remain their top bet. They said that the results broadly suggest that there is gradual recovery that's happening based on the NP numbers that they've seen. However, they do stress that the bank needs to address non-financial issues for re-rating. So they've maintained a buy and the target price at 400. Even if you look at the next one, which is Goldman Sachs, they have maintained a buy, retaining their target price. They've said that they're seeing more confidence on the asset quality, and they believe that growth is only likely to pick up from here onwards. And they're also liking the fact that they have ensured that the bank's financials are insulated from the inquiry into MD and CEO, which is something that was weighing on the share price. Next, we also have CLSA, where they have also said that ICICI continues to remain amongst their top picks. They said that they are encouraged to see moderation in slippages, and better asset quality is what they're expecting, and they expect that rise in ROEs. These two things which will drive re-rating for the stock here onwards. And finally, you have Macquarie, which is again retained. They are outperformed with a target price of 416. They've highlighted the fact that retail loans for the bank are now at 58%, so they don't see a reason as to why the bank has to be classified as a corporate private lender rather than a retail, and this is what they believe will work in their favor going ahead. The retailization core FY20 price to book value of 1.1 they believe offers comfort on risk to reward. So overall, Neeraj, it's the valuation picture which doesn't look very demanding, and that's what's driving the positive outlook on this bank.
And maybe that's what makes Axis numbers very interesting as well. Shraddha, thanks for putting that into perspective. Well, those are the two heavyweights, and which is why we spend so much of time on it, because today morning it will be about these two names. However, let's not forget, keep in mind, another lender which came out with its first quarter earnings on Friday was Bank of Baroda. We'll get you Vishwanath Iyer's conversation with the bank's Managing Director and CEO PS Jayakumar at about 8:45 a.m. today. That notwithstanding, the third large heavyweight that came out post-market hours was HCL Technologies. Now, visa issues aside, the top 4 tech companies in terms of market size have managed to put up a good set of numbers in the June-ended quarter. Agam Vakil is here to take us through the key takeaways now. And Agam was at Delhi talking to the HCL Tech management as well. So Agam, now you've spoken to some of the largest IT companies. What do you make of how they've fared in this quarter?
Neeraj, by far, this time the winner has to be TCS, and it's going to be evident in the kind of numbers that I'm going to take you through. So let's start off with the top line itself. TCS is the only one which has posted a growth of 4.1%, over 4% growth, and that's ahead of street expectations, whereas for the other three, Infosys, HCL Technologies and Wipro, largely in line, and as you can see where the strength is coming in is TCS. Now, moving on to the guidance too, when it comes to TCS specifically, they do not give us a guidance, but we have seen the recovery in financial services and vertical, and that is where we are likely to see that strength come in. Of course, recovery in America is also standing out. But coming down to the guidance, as I was talking about, TCS does not give out a guidance, but the management has indicated a double-digit growth, so that's likely to happen, and that's well above Infosys' 6 to 8%. Which has been maintained, and HCL Technologies, again, its top end of the range is around 11.5%, so that's again double digit. But we must remember that because TCS has already done around 4.1% in the first quarter, one wonders as to whether or not we can see a number higher than HCL Technologies in the financial year to come. Of course, Wipro has indicated about a 0.3 to 2-3%, but this is for the second quarter. And once again, this is higher than expected. So when it comes to your guidance, it is TCS with slight edge for Wipro, but Wipro otherwise operationally is relatively weaker in comparison to the other three peers. And let's take a look at some of the margins that how they have panned out. Again, TCS was the one which stood out in terms of margins contraction, despite the fact that they did have wage hikes come into play. We've seen a contraction of just around 0.4%, largely on account of operational efficiencies which come into play. Infosys has seen, this is actually 1% decline. So we've actually seen the margins come off from 24.7% to 23.7%, again largely on account of your wage hikes come through. HCL Technologies has seen an expansion in margins, yes, largely on account of Mode 2 and Mode 3 services for this particular quarter, and we must remember that we do not see wage hikes come in. In fact, they will be coming into effect for the second quarter, and that's the reason why we're seeing an expansion. Otherwise, we would have likely seen a contraction in this quarter as well. And also Wipro, the only reason why we're seeing that 2.1% increase is because of the fact that it did take into account provisioning on account of certain client bankruptcies, and that's the reason why we're seeing that normalcy come back when it comes to Wipro's margins for this particular quarter. So once again, at this point in time, it is TCS that stands out. How does this stack up when it comes to valuations as well as return potential? Well, it's no price for guessing. The TCS is going to command a premium because the kind of numbers that it has posted, not just for this quarter, but also the previous few quarters. And that's the reason why you have the FY19 for price to earnings for TCS around 24 times. We have seen Infosys move up quite substantially over the previous few weeks. And that's the reason why we're starting to see Infosys catch up with TCS with a certain premium to something like an HCL Technologies or Wipro. It remains to be seen, and it's a little bit of a surprise considering that HCL Technologies at this point in time is slightly cheaper when compared to Wipro, despite the fact that operationally and even in terms of growth, it is a notch ahead of Wipro. Then that's the reason why you are seeing HCL Technologies being assigned a return potential of 13%, the highest among all the top 4. And of course, Wipro as we all know, were lackluster Qs, and the only thing that may be going in favor of Wipro at this point in time is a slightly higher than about expectations of guidance for the second quarter. That said, this is how it stands out, and Infosys does stand out in terms of analyst ratings, but in terms of return potential, HCL Technology is right there with the guidance of double digits, and we'll just have to wait and watch whether or not TCS does, as a matter of fact, come in with double-digit growth for this financial year.
It's very interesting, Agam. Thanks for putting that into perspective. This plate has more significance than just the valuation math out here. Agam, now you've arranged the IT companies in the order of how big they are as well, and there is a change out there in the pecking order.
Right, so in terms of pecking order, when it comes to revenue, this has been a breakthrough year for HCL Technologies because it takes over as the number three position for the number 3 spot as the company with the highest revenues as an Indian IT company, and that's where it actually moves up. So this is how it stacks up in terms of revenues too. TCS right at the top, followed by Infosys, and HCL Technologies on the number 3 spot with the highest revenues. And Wipro moves on to number 4. Do remember, in terms of market capitalization, this ranking list has always been there for quite some time as HCL Technologies comes over, but that's probably a precursor to the kind of revenues growth that we've seen for HCL Technologies, and it's exactly how we see it right now in terms of ranking with respect to revenues as well as market capitalization.
Very interesting. Maybe it's a case of not as much as HCL Tech's rise or ascent as opposed to Wipro's stagnancy over the last few years maybe. But Agam, thanks for putting this into perspective. Very interesting. If return potential is to be believed, maybe HCL Tech, but clearly the winner this quarter has to be TCS. Last piece on First Word today. It had 20 speakers, each allotted 20 minutes to talk about one idea, and each came up with their own analysis on why they are betting on this one particular stock. We got you some of the best minds in the industry all through Saturday from the Alpha Ideas 2020 meet. And here's just a quick snapshot of what some of the speakers had to say.
Our idea is Hindustan Foods. Firstly, let me just preempt this. We've been an investor since, so we've been an investor. We hold 20% of the company. So please assume all the biases that you want to think of. Yeah, just 1 minute. That's it. So we've invested at $40. It's at $320 odd bucks right now. It's 8x in 2 years. I still think there's a great opportunity. Doesn't mean that I'll not sell tomorrow. I could. Okay, but more important is that revenues of the company when we invested last year was 35 crore. Sorry, the year we invested was 35 crore. Last year was 140 odd crore. We've already had a business plan which has been communicated to investors. So we'll be a 1,000 crore company next year, 2020. 35 crore company will become a 1,000 crore company next year. I would presume, and I'm shooting right now, it's not part of any board or anything, but I think we'll have an opportunity of being a $500 million company in the next 3 years after that, or 2 years after that. I think that looks the visible roadmap. So obviously a business which did not, almost non-existent, will become disproportionately relevant, and you can presume what margins you'll get and so on. So suddenly the ROI of the business will move from 16, 17% that you used to do to possibly closer to 22, 23% or more. Which is obscenely great for a consistent ROI for almost the next 10 years post that.
Infratel remains, as I mentioned before, Airtel and Vodafone's last valuable asset. There is no other way they can get money other than infusing equity. So they will have, they cannot impair the economics of this particular entity for short-term gain. Solvency issues with Voda Idea. I showed you the massive debt to EBITDA coverage ratios, but no player in the world is a two-player market. So if they decide to exit it, somebody could acquire it. And regulatory changes with towers. So today, what is shared is only the passive infrastructure. Tomorrow, if they share all their active infrastructure, which is the antenna and the radio, that could free up significant capacity. But it's unlikely to happen because the market leader and the most efficient network, which is Reliance Jio today, will not allow that to happen. It will not want to cross-subsidize somebody else's network. So how do we execute this idea? I feel there is still some risk of being too early into the trade. There is a decent probability that nothing could happen for another 6 months because we still have to see how the Voda Idea merger fructifies. I feel that there will, the stock price could be depressed because of that. Airtel and other shareholders are likely to continue to dilute stake to fund. So there could be an overhang on the stock price because of that. So my sense is this is an interesting idea. It is not something you could buy tomorrow in a full position. I think you should spread your bets and keep an eye out for tendency growth before you want to really increase your position size. And I feel that you need to have the patience for 4 years for this entire thesis to play out.
Balaji Amines, where they did allocation in constructing a hotel, and there came a point where the market cap of the company was equal to 2 years of cash flow. So even if you write off everything, management may have a different logic or reasoning for putting up a hotel which was not in line with what the analyst perceived, and that is why the stock was hammered. So this is capital allocation. Now, a number of times there are short-term negatives in the company. In case of, I am giving you the example of Balaji Amines again, they undertook an expansion which was taking more than the anticipated time. And that was because of some process or some, they were not able to stabilize the product. And they used to tell in every annual report that our expansion is going on stream in this month, which never used to happen. So people started thinking that this company does not have execution capability. But the fact is that if such a company is trying to do this kind of a thing and they're not able to, get the desired quality of the product, there have to be some entry barriers in the business. So because of that also, the stock came down to very, very attractive valuations.
Well, all of these conversations are there on our website in the videos section. So click on to bloombergquint.com, go into the videos section, and you will see all of these videos from the Alpha Ideas 2020 meet. Well, that's all that we have on First Word today, though. Lots more lined up on Indian Open. We discussed the commodity and pricing pressures cropping up in the auto industry and the impact of the margin downtick on Bajaj Auto on the two-wheeler space with Mahantesh Sabarad of SBICap. Decode the June quarter earnings with the HK and Raghavan of Equitas Holdings and Anand Deshpande of Persistent Systems. After this break, a full tilt towards the day's trade.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're still watching Indian Open with us on Bloomberg Quinn. Let's quickly do a check of what the Asian markets are doing currently. Well, it seems like a mixed start to this fresh week. Nikkei is down almost 125 points. The handover from US, remember, was quite weak. Shanghai, Hang Seng not doing too much, but Hang Seng definitely seeing cuts of nearly 0.5%. Remember, last week our markets hit fresh highs, so we will be starting from those high levels today. And SGX Nifty is suggesting a very flat opening. Let's see if we can surpass the mark of 11,200, because the SGX Nifty futures are definitely trading above the mark of 11,300. Well, we had a whole host of earnings also coming out, so we will be seeing reactions for biggies like Reliance Industries, HCL Technologies, and also from the private banking space, ICICI Bank. How should one brace for today's trading session? Let's go across to Gaurang, Shah, Head Investment Strategist at Geojit Financial Services, who joins us on the show now. Hi, Gaurang. Good morning to you. First up, a question for the biggie Reliance Industries, which has contributed the gains that we've seen on Nifty, at least for this year. Outperformance from the petchem business and also steady performance when it comes to the telecom business, especially the ARPU side. What sort of reaction do you foresee in the stock? Any sort of target revision that you're seeing with regard to Reliance Industries post its first quarter earnings?
So, morning to you, Navneet, and morning to all. I think it was a stellar set of number, and the slight bit of positive, if you will, which I thought would not be appearing at least for some time, was from the Geo's broken down numbers. On all other accounts, I think the company stands quite tall, and as a disclosure, since we are speaking about Reliance Industries, it's prudent on my part to give a disclosure that we have a positive coverage on Reliance Industries. Post numbers, our earlier targets were 1250. I think the revised targets, if I'm not mistaken, stands at about 1325. These are all conservative targets, Navneet. I'm quite sure as pricing power comes back for Reliance Jio, as their retail business expands the way it was referred to during the AGM, and the new business vertical that they have spoken about, that is city pipe distributions, city gas pipe distribution, and whatever investments done in petchem, refining, etc., auguring well over the next couple of quarters, I'm quite sure. I think targets will stand revised. So I think you should, if you have it, hold on to it. If you don't have it, initiate the investment at current levels, and on dips you can definitely add to it.
Interesting. Gaurang, for somebody who looked at the ICICI Bank loss optically, but has seen the ADR do what it has done and therefore believes that the stock will start off higher, the question is, after these quarterly numbers and the expectations of what the corporate-facing banks will do going ahead, is ICICI Bank a good investment candidate northwards of 300 rupees? Good morning and very good having you today, Gaurang.
Pleasure's all mine, and when the going was tough for ICICI Bank, both ICICI Bank and Axis Bank, we remained positive, and I think we've referred to this on this show and the show that Navneet anchors, that is Ask BQ on Fridays. I'm normally there, on Wednesdays sometimes. I have always maintained a positive stance on ICICI Bank and Axis Bank, even when the going was tough and difficult, because we believed in the conviction of things turning around. And Neeraj, there are sectors and stocks listed in Indian stock market and the world over which don't do extremely well 365 days a year and continuously for 3-4. There are patches of bad times, there are patches of difficult times, but what you need to focus and see is whether the management is capable of coming out of those difficult times and coming back to the growth trajectory. And that's where we believed, yes, there were issues which had a terrible negative impact on both Axis Bank and ICICI Bank. But on both the banks, we remain positive. Northward of 365 is our target for ICICI Bank, and I'm sure these targets will get revised. Even for Axis Bank, northward to 640 is what our target, and even there, let me say this, Neeraj, that we will definitely revise it upward because we see tremendous possibilities of turnaround.
Okay, let's see whether ICICI Bank stock reacts positively as we've seen for the ADR. But remember, whether this calls for a re-rating or not after such a high provisioning number that we've seen in the first quarter, let's see how the stock reacts to that one. And Gaurang, I remember that you were not too enthused with bank recapitalization, which was announced, and you've always had preference towards the private banking space, yes, compared to the PSU banking space. But the other number, Gaurang, which the street will be, watching out for the reaction will be HCL Technologies, though the numbers were pretty much in line. I think a slight bit of a miss with regard to the EBIT margins. But do you now see more of valuation comfort when it comes to HCL Technologies compared to biggies like TCS or, for that matter, Infosys?
So Navani, let's say this. I mean, over the last 9 months, I think the entire IT pack has seen a tremendous, run up. Some have gone up by 30, some have gone up by 60, 70, and some of them are 100%. To name two stocks which got listed last year at 650 and 750, and now are at 2x, L&T, Infotech, and Technologies, just to give you an example. And equally so, I think you look at NIT Technologies, Science Limited, Persistent, even the biggies, HCL, TCS, Infosys have given you sizable amount of return over the last 9 to 12 months. So our sense, and we remained positive almost about 1.5 to 2 years back when nobody wanted to touch it. Even Indian pharma sector, I think it's a fantastic sector to look at. Even some of the public sector banks is something that you should look at. 3 names primarily: State Bank of India, Bank of Baroda, and Indian Bank we like. In the IT space, I think you should make a beginning, but don't put all your money at one time, because there may be a case of some kind of consolidation and profit booking or correction on IT. But it is one sector that will definitely be in the spotlight. Whether it is, Trump announcing any kind of restrictions, or whether it is the turnaround on the domestic front. We are extremely positive on Indian IT and pharma, both on the growth story visibility.
Okay, and Gaurang spoke about PSU banks. Let's talk about one such bank, Bank of Baroda. Vishwanath Nair in conversation with the management. Let's hear a slice of that conversation.
The data is clearly evidencing that as it is a turnaround. We've looked at it from every dimension. That said, it would be good for us to wait for one more quarter just to make sure that all the assumptions actually roll out. But clearly, we're in a better position today relative to what we were at the end of last quarter, as evidenced by growth, profitability, revenues, the way the NPA numbers themselves are moving, the provision coverage ratio across all dimensions. We're in a much more comfortable place. And the business is humming from all cylinders.
Maybe, because this is a question that we keep asking every quarter, but the stress is an important bit of banking in the current scenario. On the stress side, what is the situation looking like? Are we fully in control at this point in time, unless pending any negative surprises later on?
I think, as we were explaining, bulk of these slippages that we have seen today, this quarter, comes from our watch list. Simultaneous to that, we have seen a reduction in the SMA levels 1 and 2 considerably, as measured by the proportion of the ANR. A couple of NCLT decisions are expected to get implemented this quarter. We have sold some asset post-balance sheet event in July, a steel asset. Some amount of slippages are bound to be there, but when you take all of it together, it does seem to us that downside risks from this point of time to the overall gross NPA number in absolute terms and the overall net NPA numbers in absolute terms seems to be reasonably contained. We cannot for sure say there won't be any increase, but even if it is, it will be in a very manageable limit, and we are sure that it will catch up during the course. I mean, we'll improve back again during the course of this year. So as we project into March, it does look that things are very contained, but as you rightly pointed out, there have been surprises in the past, and there could be surprises in the future.
The integrated agreement, and that was something that you worked on closely with the Sunil Mehta committee. The approach of having one single large lender leading the charge as far as resolution goes, it eliminates that whole idea that there's too much debate leads to no real result. But also the problem is that people may find it as stifling some of the smaller banks or their voices or their opinion in the matter, because if 60% of the lenders agree to something, then it just goes past. Would you say that smaller lenders are being shortchanged?
Not really. It could also the people who do not want to accept the resolution process that is being recommended by the lead bank have an option to exit based on a certain predefined formula, or have an option to buy out the lead bank share if they choose to. So, there is an alternative available as well. But look at it this way, that we have got to resolve the problems. Sometimes the smaller institutions can take a much more aggressive position because they have less to lose, as a matter of fact. So we have also had those situations as well. So I would say that we are all hoping that the experiences that we've had over the last several years now has resulted in an increase in the maturity curve of all of us, will resulting in much more appropriate decision. Also, there is a process of having a kind of a board that the IBA would set up, which would also be able to review the decisions that are being made. All in all, I think there are some checks and balances overall that is there. But the important thing is to get ahead with the resolution, complete, and move on. And that will result in releasing of capital and liquidity and reducing the non-earning asset, which is good for everybody.
Well, that's the management of Bank of Baroda. However, let's now try and get in our research team to talk about all the key numbers that you should watch out for, some stocks in news as well, and maybe a glimpse into a couple of stocks that are going to come out with the numbers today. So Nikki, Shraddha, Agam as well as Darshan here with all the channel checks. Nikki, let's start off with you. The stocks in news, what are the key ones?
I'm going to start off with Jubilant Life Science, where the arm Jubilant Pharma is considering raising funds via an IPO to the tune of the funds will be raised to a tune of around $500 to $700 million. Keep an eye out on that. The second stock on our list is PNB, where the PNB MetLife Insurance has filed for an IPO paper. Currently, PNB is the largest holder, around 30% stake in that company. And after the proposed IPO, PNB's stake is expected to come down from 30% to 26%. Pioneer Distilleries, this is again one which is expected to react negatively on this development, where the company has received an order from Maharashtra Pollution Control Board to stop a manufacturing activity in one of its unit. Now, this unit contributes to around 44% of the total income of the company and around 26% of the company's net worth. So we're expecting some kind of negative bearing on that counter on this development. The other news that we're tracking, TVS Logistics, which is in talks to acquire controlling stake in Gati for around 1,500 crore. It's an ET exclusive. Also, we're tracking Security and Intelligence Services, which is close to buying majority stake in another security management company for a sum of around 300 crore. A small acquisition there. Doubt there'd be a reaction to this development. NBCC may take up a stranded project of JP Amrapali. This is as per reported, as Times of India reported. Now, the money would be arranged for the completion from the balance of payment of buyers, which will go in control to NBCC account, which is a positive development for the company. And also, last in our list that we're tracking this morning, Tech Mahindra and Aeon is in final lap to buy Interglobe Tech for a sum of around $400 million. Now, Interglobe Tech is a subsidiary, or it's the IT and the back office arm of a travel conglomerate, Interglobe Enterprises.
Well, when Agam interacts with the management of Tech Mahindra, I'm sure he's going to put up that question to them. Thanks a lot for that, Nikki. Speaking of that, Agam, amongst the numbers that came out, you believe Persistent Systems stands out?
It does stand out, and it's been a very strong quarter. I'm going to take you through the numbers before we talk about the different points which has actually led to the strength. Revenues up nearly 11% quarter on quarter. Margins expanding to 12% as against 8.8%. And profit has moved up 18%. And this is all sequentially, and all the headline numbers are ahead of street expectations. The reason why we were expecting strength to come in for Persistent Systems was anyway certain licensing deals which were pushed forward to the first quarter. But that said, the numbers have come ahead of street expectations, and again, a lot of the strength is coming on the back of its technology services vertical, which has seen a growth around 2.7%. But more importantly, its alliance vertical, that is where a lot of its alliances with Salesforce and IBM, that particular vertical has seen a 39% growth sequentially, and it does contribute to nearly to a third of the company's revenues, and that's where we're seeing that growth come in. Of course, we will speak to the management a little later on who will tell us a little more about what we can expect for the quarters to come. But on the whole, it's been a very strong quarter for Persistent Systems.
Very interesting. Let's wait and watch how that reacts. Darshan, what about the others?
Yeah, so lots of numbers came out. Bank of Baroda, you heard the management speak, but nevertheless, it was a decent set of numbers that Bank of Baroda came out with. The NII grew, the profit grew, the asset quality managed to improve. So probably with the trend of PSU banks that have reacted to numbers, Bank of Baroda should react. Coromandel International, decent set of numbers. Revenues were up 12%, profit was up 23%, and EBITDA growth of 27%, leading to EBITDA margin expansion. So that was decent. Excel Crop Care also good set of numbers. Revenues were up 35%, profit was up 60%, and EBITDA up almost 61%. So this one should react positively. Lumax Autos was a good set of Lumax Industries, sorry, good set of numbers. 46% top line growth, 35% bottom line growth, and 65% EBITDA growth. Ramkrishna Forging, strong set of numbers, profit doubling, EBITDA margins coming in at close to 15%. So that was on the positive side. And two numbers which were weak in my opinion. First of all, Johnson Control Hitachi. Revenues were down 8%, profit was down 18%, and EBITDA was down 21%. And Prestige Estates also weak set of numbers. Revenues, profits down almost 30% each, and EBITDA was down 19%. No doubt there was an exception. Profit was up 30% because of an exceptional, but operationally weak set of numbers from Prestige.
Okay. And Shraddha, what about the numbers that will come out today? Two large financial names.
I'm going to start off with HDFC, Neeraj. Net higher dividend income is expected to boost earnings growth for the company. So 39% growth in net profit is what the street is expecting. 2167 crores is the number they're working with. In the last year, in FY19, the dividend income from HDFC Bank had come in the second quarter. This time it has come in the first quarter. So an addition of 511 crores. That is expected to boost the bottom line numbers. That apart, interest margins are expected to see a marginal compression. Loan growth expected to see in about 17 to 18%. We will be watching out for the continuation of uptick in corporate loans that we had seen in the previous quarter. So let's see if that sustains. Asset quality numbers likely to remain more or less steady. So overall, the stock is trading near record high. So any sort of a disappointment could actually be negative for the stock. But overall, expected to be a steady quarter.
Well, more good news than bad news, which is heartening. All of you, thank you so much for joining in and giving us that perspective. Gaurang, I'm going to take off two agri numbers. If you track either Coromandel or Excel Crop Care, seem like they came out with a good set of numbers. Do you track any of these individually?
Coromandel, yes. Neeraj, and my sense is that anything to do with agri, I'm talking about certain fertilizer companies, certain agrochemical companies, certain companies which are indirectly associated with the agri sector. Case in point, companies manufacturing solar pumps, water pumps, etc. I think all these will do extremely well, especially we cover RCF and Chambal fertilizer, since I've spoken about fertilizer sector. Under the agrochemicals, those specialty chemicals, we like UPL, we like PI Industries, Aarti Industries, Tata Chemicals, to name a few, and Coromandel, of course. My sense is, these companies will show exponential growth the way government is supporting the agri sector. And as a matter of fact, I think if you don't see any kind of negative policy from the government, there's tremendous growth to be witnessed in all these companies.
Okay, we'll be watching out for all those stocks which will be reacting, especially the agri stocks which Gaurang was talking about. But it's 8:50. On to our special segment, Bloomberg Edge, where Jayesh Kilnani tells us about a pattern that a Bloomberg terminal has thrown up on a stock today. Hi Jayesh, what's on your radar?
Hi Navneet, it's Titan that the Bloomberg terminal has in fact thrown up, and there's a couple of reasons as well. One is that it is testing support at the 200-day moving average, and as of Friday's close, it also managed to close above the 21-day exponential moving average, and the trender indicator has also been breached, and a buy signal has been generated. That's the YTD chart of Titan. But first, let's have a look at how the 21-day exponential moving average actually actually works and what are the conditions that you have to watch out for. Well, while calculating the exponential moving average, you apply more weight to the latest data, and because of that it reacts faster to recent price moves and it is better suited for trending markets. Likely that the trend has in fact changed for Titan. Let's have a look at the chart of Titan and go through some of the conditions that we have just pointed out. So what you have on the screen is YTD chart. The blue and the white candle show the price movement. The broad green line that shows you the 21-day exponential moving average, and you can see that this candle, which was the hollow candle of Friday, it has in fact breached above this and closed above as well. Incidentally, what has also happened is the red line, which is the trender's resistance line, that has also been breached, thereby giving it a buy signal as well. So multiple triggers working in favor of Titan.
Okay, we'll watch out for that. Jesh, very quickly, back testing it. How well does it work?
4.5% over the next 10 days, Neeraj.
Okay, so in the past it's given 4.5% over 10 days. Yes, thanks for putting that into perspective. We'll watch out for Titan today, as we should watch out for some other charts. Let's get in our experts. Amit Harchekar, Director at Index Genius Investment Advisors, as well as Ruchit Jain from Angel Broking join us. Gentlemen, both of you, good morning. Thanks for joining in and appreciate you waiting by while we were just doing some of the fundamental news. Amit, let's start off with you. How are you approaching trade today? What's the trade on either the Nifty or the Nifty Bank?
Well, I would say the view on market remains quite positive, but what we would suggest is at these levels, you need to trail your stop loss for your long positions at around 11,245 on a closing basis. If that gets violated, that is the time you should exit your long positions in the Nifty futures. The reason why what we are saying is, despite such a very good breakout in Nifty about 11,200, we have not seen similar decline in USD INR, and that is a matter of concern. Because we believe if in next 2-3 trading sessions, if USD INR fails to go below 68.5, the next move should take USD INR towards 69.5, and that could trigger some selling in financial stocks. Apart from that, if you see Nifty IT index, that has completed a rising wedge pattern, so there is a downside risk of 15% in Nifty IT index. So that is why, although we are very positive on Nifty, it's time you should keep your stop losses very intact, or close below 11,245 would mean exit your longs, else we are heading for a target of 11,440 in Nifty futures.
Ruchit, what about you? Your view on Nifty Bank Nifty for the day?
Yeah, hi, very good morning. Well, if we just see last week, then probably after a consolidation phase, we saw the index, both the indexes, Nifty as well as Bank Nifty, resuming their broader degree uptrend. Now, since we have seen all-time high levels closing, so usually we take out reciprocal retracements of previous correction and for target projections. So at this all-time high, for Nifty, we are projecting targets around 11,430, which is 127% retracement of the previous corrective move on the weekly charts. So we are positive on the Nifty as of now. The Friday's gap area of 11,180 should now be a support. So one can create fresh buys also, keeping stop loss below 11,180 for target around 11,430. Similarly, on the Bank Nifty front, also we have seen all-time high levels. So as per the reciprocal retracement theory, the target projections are coming around. First targets are coming around 27,840. So that may be the levels to watch out for intraday perspective, 27,840. And from a short-term perspective, we could see index heading above 28,000 as well.
Okay, let's talk about specific stocks. Amit, to you first. Your stock ideas for the morning?
Well, I would still prefer a commodity space to go long even at current levels, because value-wise they are trading at extremely lower levels, and we believe the downside risk is very low despite market correction. Within that, our pick would be buying Century Textile futures. Again, stock has seen a very good breakout from the short-term trading range. Now the stop loss for a long trade would be 920, and we are expecting target of 1020. Second trade would be buying Hindustan Zinc futures. Again, a good consolidation at 265 to 66 zone. Now we believe 266 will turn out to be a stop loss for a long trade. We are expecting a target of 290 in Hindustan Zinc. And thirdly, since we have a very bearish view on Nifty IT index, we have suggested a shorting trade on Infosys. Here, what we suggest is you need to short Infosys futures with a stop of 1430. We are expecting Infosys to come down to 1300 levels.
Okay, so those are some strategies coming in from Amit. Ruchit, your stock specific ideas for the day?
So a couple of buy recommendations. One is a buy call in Ujjivan. If you see the weekly charts, although the stock has not given any particular breakout, but it has been consolidating above its weekly 89 EMA. So I think a strong support base has been formed near the recent lows in Ujjivan. So we are anticipating an uptrend in the stock. So short-term traders can go long with stock below 382 for target around 416. And my second pick is a buy call in Arvind. Well, during last week, initially we saw that the stock gave a breakout from a falling trendline resistance, and in last couple of trading sessions, again there was a pullback move. So post this pullback move, this trendline breakout should now act as a support. So one can go long in Arvind at current levels, keeping stop below 401.70 for target around 469.
Yeah, some strong moves for a lot of names there. Let's wait and watch. Gaurang, just a quick thought here on what would you do with the AMC space? HDFC on listing will start off 400, 500 points higher. Let's say if somebody wants to invest in that pocket, is HDFC AMC giving you the best bang for the buck, or would you rather buy a Reliance Nippon Asset Management, or conversely even a Motilal Oswal?
I would beg to differ. There is no comparison between Reliance Nippon and HDFC AMC, and the way wealth is created by any of these stocks from the HDFC pedigree, I think it's tremendous, whether it is HDFC Limited, HDFC Bank, HDFC Life, Group Finance, and the new kid on the block from the same group, HDFC AMC. Let me give you a disclosure. We had come out with an IPO note and it was a subscribe. I'm not talking about listing gains. I think if you are in for money and long term, there is a lot to be made. So don't go for listing gains, even if you have leveraged your financials and bought it. See to it that you somehow overcome that hurdle and stay invested for a long time.
Okay, that's the advice coming in from Gaurang. If you're lucky, if you've been allotted shares, let's see, I think the numbers will come out in a day or 2 days' time. Do not go for listing gains. Probably you can get better price in the near future. But just few seconds to go for markets to open. Well, the Asian indices have been indicating a mixed start this morning. Nikkei has been trading weak. We've seen some cuts coming in also for the Shanghai market is also now trading in the red. And Hang Seng, when we started the show, it was down 0.5%, now down almost 0.7%. So the start on the Asian screen is not looking that great. But let's see what is SGX Nifty is just about trading flattish, so no major losses coming in there. The pre-opening rates will just give you an indication where we would be opening. So that's a flat start, the initial pre-opening rates there on your screen. But remember, they'll settle down just in the next 7 to 8 minutes. So watch out till 9:08. But in terms of individual stocks, we're watching out for a lot of result reactions. So pull up ICICI Bank. Let's see what's happening in terms of individual stock there. ICICI Bank coming out with its numbers 0.5% higher, at least in the pre-opening session. Reliance Industries, the other heavyweight on the index, will be reacting. Good set of numbers with regard to the petchem business, 1.5% higher right now. And also HCL Technologies, 2 major order wins. Actually, that's what making the brokerages go bullish in this one. And obviously some bit of valuation comfort coming in, 972, almost 1% higher with regard to HCL Technologies. But some other stock, I want to pull up ITC. Remember, that was the one which contributed the most on Friday. It was up almost 5% in trade. That's indicating a positive start, 305 in the pre-opening session for ITC. Bharti Airtel, 5% lower. That's the top loser right now, at least among the Nifty constituents. I don't know if that's reacting to the geo performance which has been posted by Reliance Industries for first quarter. Titan down 1%. HDFC Bank indicating a downtick of almost 1%. And on the upside, you've got Axis Bank, which will be reporting its first quarter numbers. Ahead of that, we're seeing some positive start. Also, stocks like BPCL, Z, Eicher Motors are indicating a positive start.
Well, let's wait and watch. HDFC Bank, amongst others, Infosys, amongst others, the pre-open session, they're starting off slightly wobbly. Let's see. Grasim is looking like starting off very wobbly. But we don't have ICICI Bank and Reliance amongst the top 10 gainers, and that's the key thing. Let's see if these rates change. I just want to mark what Gati is up to. It's an Economic Times report about maybe some interest from TVS Logistics for the company. The stock was up 7% in Friday's session. Likely to start off on a positive note. The pre-open rate seems to suggest that. And I want to mark, I'm sure Amit already spoke about them, but Coromandel and Excel Crop Care, a couple of names which came out with good set of numbers. Let's see if they are reacting. 1.5% for Coromandel. After 2 or 3 iffy quarters, they've done well. Excel Crop Care, a small good start. And Motilal Oswal and Reliance Nippon Asset Management, 2 strong movers over the last 1 week in light of what happened to the HDFC AMC. And they're starting off marginally higher, nothing too much. Just bring up the rupee and the bond yields before we get to the primary markets once again. Well, actually, primary to secondary markets today. The rupee starts off at 68.73. No big shaves there. Just about 7 odd paise movement. The bond yields, is it about 7.75? Yeah, 7.77. So, but hardly any move there on the bond yields too. Okay, lots more to talk about with our experts. Maybe just taking a final thought from Gaurang Shah before we let him go. Gaurang, between HCL Technology, I mean, actually you gave us a view on large cap IT. If I can ask you about mid cap IT, Persistent Systems specifically, very strong set of numbers. It's probably coming after 2 or 3 slightly iffy quarters. Would this enthuse you to buy the stock?
So I'll give you not 1 but 3 names in the mid cap IT. So Persistent Systems, NIT Technologies, if you will, and Sant Limited, Neeraj. I'm extremely excited about all these 3 companies in the mid cap IT, if you will.
Okay, well, we'll make do with 3, no problem, but Gaurang in part answers my question as well while giving that coverage that Persistent Systems probably were the numbers that enthused him because he has got it on his buy list. Gaurang Shah, really appreciate you taking the time out. As always, must add, thanks so much for joining in this morning and giving us your thoughts.
Always a pleasure. Neeraj, all the best. Thank you very much.
That's a bullish Gaurang Shah, I must say, on a bunch of stocks and bunch of news bits as well. Now, let's get in Soumit Sarkar from our research desk yet again, because the women apparel maker TCNS Clothing is all set to make its debut on the bourses today. Company received decent response from institutional investors as well. Soumit joins us to tell us all that you need to know about the company and what's the possible listing scenario and the valuations thereof. Soumit.
So the company had raised close to 1,125 crore rupees at an issue price of 760. Now the issue was undersubscribed by the retail portion, but it received a good demand from the QIB portion. Now the QIB portion was subscribed nearly 13.5 times, while the HNI portion was subscribed close to 5 times. Retail portion remained undersubscribed at 0.7 times, and the total subscription for this IPO was only 5.3 times. Now the street is expecting a premium of only 10 rupees per share on listing. So let's see how the valuations would stack up if the shares list at a premium and if the shares listed at a discount. Now the issue price of 716, the market capitalization of the company was close to 4,400 crore rupees. Price to earnings was 45 times, market cap to sales was 5.2 times, and EV to EBITDA was 28 times. Now if it lists at a premium and the share prices are close to 730 rupees, then the market capitalization of the company would be close to 4,500 crore rupees. Price to earnings would be 45.6, market cap to sales would be 5.3, and EV to EBITDA would be 28.5. Now if it lists at a discount and the share prices are close to 700 rupees, and the company's market capitalization would be close to 4,300 crore rupees. Price to earnings would be 43.8 times, market cap to sales would be 5.1 times, and EV to EBITDA would be close to 27.3 times. Now if you see the business of the company is mainly into women's branded clothing apparel. It designs, manufactures, markets and retails women's branded apparel. It has 3 brands, W, Aurelia and Wishful. Now the W brand contributes nearly 58% of the company's top line, and the revenue from this brand has grown at a compounded annual growth rate of 23% over FY16 to FY18. The Aurelia brand contributes 34%, and the revenue from this brand has grown at a CAGR of 48% over the same time period, and the Wishful brand contributes nearly 9%, and the revenue from this brand has grown at a CAGR of around 40% over FY16 to FY18. On the distribution side, if you see, the company sells its product through exclusive brand outlets, large format stores, multi-brand outlets, and also through online portals. It has all these outlets in pan-India basis, and it also has 6 outlets in foreign countries like Nepal, Mauritius and Sri Lanka. Now the company gets nearly 50% of its revenue from the exclusive brand outlets, and the remaining 50% comes from the large format stores, multi-brand outlets and through online portals. On the peer comparison side, we have tried to compare it with Cable Kiran Clothing and Future Lifestyle Fashion. Now these companies sell men and women branded apparels, unlike TCS which only sells women branded apparels. And the company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 49%, 83% and 63% over FY14 to FY18. Now the reason behind such a high growth rate of profit and EBITDA is because in financial year 2018, the company had a comparatively lower employee cost and tax expense and also an higher other income. Lastly, on the return ratio side, the company's return ratios are better than its peers because of its asset-light business model. For the financial year 2018, the company's return on equity was 23%, return on capital employed was 38%, and return on asset was close to 20%. And also compared to the last year, that is financial year 2017, all the 3 return ratios of the company have expanded.
Okay, so Amit, thanks a lot for bringing those details with regard to new kid on the block. We'll see how the listing pans out. Looking at the valuations which you highlighted, trading at 45 to 46 times on trailing basis for FY18. Just looking at the pre-opening rates once again, right now Nifty is somewhere about, we're looking at a positive start actually, and if we can surpass the level of 11,300, that'll be another level of fresh highs that we could see at least in today's trading session. Neeraj was talking about Gati, the report which has been, which has come in Economic Times paper today. Remember, it was just not about Gati. The entire logistics pack rose in the last hour of trade on Friday. You had stocks like Snowman Logistics. Probably it could be on back of that news, but let's just get a technical check going for this one. Remember, the promoter stake is only 23 to 24%. What the Economic Times report is indicating that TVS Logistics is looking to acquire that stake for 1,500 crore rupees, and the market cap for this company is just about 1,050 crore rupees. Ruchit, on the charts, considering the surge that one saw in the last hour of trade on Friday, what sort of levels can one expect on the upside in today's trade?
See, on the higher side, we can see levels around 110, 111 in today's trading session. But whether those levels would be broken out and we would see a sustained up move, that is a very difficult answer to question right now. I think if any existing long positions are there, then they should look out to book positions around 110 to 111, because that is the 200-day moving average on the daily charts. The stock is already indicating pre-opening rates of around 105, so definitely fresh buying is not advised. Only if we see a closing above 112, then we could again review the stock.
Okay. You know, the stock that is likely to start off on the most positive note today in the Nifty 500 is Bank of Baroda. The numbers look good, yes. 149 though, Navneet. I remember 2 years ago, or when this first hints of not really the 25th October resolution, but the earlier resolution started coming about, and P.S. Jayakumar started about the kitchen sinking process, so on and so forth. The stock was at 152 when an eminent advisor had mentioned about going long on Bank of Baroda because the pain seemed over. It's now been a 2-year move, I think, wherein BOB has largely remained flat, not given any kind of returns. So it's a good quarter. The stock has done well. The question mark only remains if it can do better than now going ahead. Maybe get in Dhananjay Sinha, Head of Research, Economist and Strategist at Emkay Global, to talk about, start off with this and talk about a lot more other things. Dhananjay, good having you. Thanks so much for joining in. Now, I know you've not been, and for the right reasons and the right call as well, not particularly enthused by the recent 9 months of the PSU banking reforms. Could we now see the turnaround the corner of the corporate-facing banks, be it the large PSU ones or the private sector ones? Because ICICI Bank numbers too showed some strength.
So I think we have also been of the view that there is a cyclical upturn as far as the credit growth is concerned. And we had targeted about 16% systemic growth for financial year FY19, and we have already seen that credit growth has actually moved up from 5% to currently a little lesser than 13%. So I think broadly in the trajectory that we are seeing, I think over there, our view has been that the reason why we had sort of been somewhat, we have been overweight on private sector banks, even the corporate lenders, is because we thought that, some of the private lenders or private banks have the growth capital, and they can actually grow faster than the system, especially the public sector banks, and hence increase the market share. I think that that thesis would remain, notwithstanding the fact that as the overall lending growth improves, even the public sector banks will also show a certain amount of recovery in lending growth, but on a relative basis they will still be lagging behind is what was our thesis. So I think the turnaround in credit growth is broadly in line with what we have been saying. So as far as the public sector banks are concerned, I think one reason that was concern for us was also the mark-to-market losses because of the shift in the yield curve. I think that part still remains. So I think some of the private lenders have also demonstrated that public sector banks will also show that. I think, but nevertheless, there is a turnaround as far as the lending growth is concerned, both for the private corporate lenders and also for the public sector banks. And some of the banks such as BOB has actually demonstrated that quite clearly.
Well, we'll talk more about this, but Dhananjay Sinha, who gave a right call when the whole street was going gaga over PSU banks, and he had been circumspect, is now starting to sound constructive. We'll actually talk more about this post the market opening as well, but just 2.5 minutes left for the market to kickstart trade, so let's tell you all that you need to know to stay ahead in trade today. First up, a slew of earnings to watch out for today. Axis Bank, HDFC, Tech Mahindra, Avenue Supermarts, as well as Interglobe Aviation will be reporting their quarterly results today.
Among the big earnings that came out over the weekend, Reliance Industries along with Jio reported strong financials, while HCL Tech met street estimates and ICICI Bank reported its first net loss since 2001.
In other earnings, Coromandel International, Bank of Baroda, Excel Crop Care, Lumax Industries, RK Forgings and Persistent Systems came out with a strong set of numbers.
Among stocks to watch, Gati will be in focus today as TVS Logistics is in talks to acquire it for 1,500 crore rupees. The agreement is likely to take place in a few weeks as per the Economic Times report.
Women apparel maker TCNS Clothing will list on the bourses today. Meanwhile, HDFC Asset Management's IPO was subscribed 83 times on the final day of bidding on Friday.
And Jubilant Life's unit, Jubilant Pharma, is considering raising funds through the IPO route. Well, those are a couple of stocks to keep an eye on. Let's quickly get you the top trading call from our technical experts before the market opens. Amit, coming to you first. Looking at the pre-opening rates, your top call would be?
I would be buying Raymond's with a stop of 925 that we are expecting target of 1020, and second would be buying India Cement with a stop of 114 there we are expecting a target of 125.
Okay, Raymond's and India Cements, that's a buy call on two stocks. Ruchit, what about you?
I think banking sector will continue its up move. So Federal Bank is a buy amongst this pack. One can go along with stop below 88 for target around 95 to 96.
Interesting. Amit, just a quick thought. Do you have a strategy in the Nifty Bank levels to watch out for?
Well, I would be watching out 25,750 on a closing basis. If we do not see a 26, if we do not see a sustenance above 25,700, then probably I would be quite cautious. But overall view is positive. But I would, the 25,700. We need a strong closing basis movement. Else, there is a possibility of a 2 to 3% correction in bank Nifty.
Well, let's wait and watch if that happens. Ruchit, of course, believes that the banking momentum will continue. So Federal Bank amongst his top calls. Gentlemen, stay on. We'll probably get an opening thought from you. But here's how the markets are likely to start off today. The Nifty Bank being the key participant, largely led, I believe, by ICICI Bank, because that's likely to start off as the strongest node, about a couple of percentage points higher. We'll get to know in just about seconds from now. This is how the markets are starting off this Monday morning. The Nifty Bank leading the pack, about 0.5%. Early days as yet, but still higher. The Sensex about 0.25%. The Nifty lying absolutely flat in the session today. I reckon Reliance has not put its hands up, but let's wait and watch if it does so. The mid caps and the small caps should come up on your screen, and let's see how they're starting off, about 0.25%, so not too much. Bring up the heat map, and let's see ICICI Bank right up there. Yes, 2.5% higher. SBI does well too. HCL Tech reacts to its numbers. Reliance Industries about 1% higher, not too much, but about 1% higher, and the oil marketing companies marginally higher. But it's an even Steven screen, to be honest. Bharti Airtel is down, Kotak Bank is down, HDFC Bank is down. So private heavyweights like HDFC and Kotak just putting that pressure on the Nifty Bank. But it's a flat start for the markets. ICICI Bank really, and SBI too, to be honest, the two key banking names which are doing well, trying to offset the damage which might be being done by HDFC Bank and Kotak. Remember, HDFC Bank, the QIP is likely to be, the details likely to come out tomorrow post the board meet. So that is something you should keep at the back of your mind. Kotak Bank, though, 1% lower in trade. Just very quickly, 2 or 3 trends that I want to mark off before I hand it over to Navneet for what's happening across the liquid universe. Some result reactions, maybe a BOB 6% higher, Coromandel International 2.5% higher, and Excel Crop Care starts off about 3% higher. So good start to these names. What about stocks in news? Gati was a stock in news, all right. ET says that TVS Logistics may buy the company at a 1,500 crore valuation. Please read the story on the Economic Times. But the stock, after a 7% up move for Friday session, up another 14% right now. So good start to Gati as well. Last but not the least, the movers and shakers of last week, Arnam and Motilal Oswal, gaining momentum yet again. Reliance Nippon Asset Management 2.5% higher yet again. Navneet, what are you spotting?
Well, Gati is right on top, Neeraj, with 13 to 14% gains if I look at the Nifty 500 index. But remember, it's fresh highs for Sensex, Nifty, and also for Bank Nifty in today's trading session. So a lot of catch-up required for the mid-cap indices. Schneider Electric is the other one, and that came out with its numbers on Friday. That stock's opening with gains of nearly 11% in trade, and Bank of Baroda obviously reacting positively. There was a bit of improvement when you look at the net NPA sequentially. Thyrocare is the other one, which is up almost 6% in trade, and something like stocks like Radico Khaitan, Persistent Systems is up 3.5%. That too is reacting to the numbers in today's session. Jubilant Life on the other side, remember there was a news regarding that. That's down almost 3 to 3.5%, and also JK Cement, that's reacting to its numbers which came out. Remember the higher petcoke prices have actually impacted the first quarter earnings for JK Cement. Since we are on JK Cements, let's also pull up Shree Cement. That was down 2 to 2.5% on Friday. The numbers are slated to come out today. Not too much of a reaction, at least in the opening session. Other stocks like Inox Wind, you've got Prestige Estates and Unichem Labs, which have started the day on a negative note, and a couple of other result reaction. NTPC, pull up that one, where some bit of margin improvement was seen on year-on-year basis. NTPC starting the day with gains of about 1%. Lumax Industries was the other one, where margin expansion was seen. Good operating performance. EBITDA up 65% for this counter. The start has been good, 4.5%. And Ramkrishna Forgings, the other number which came out, where margins expanded quite substantially to 14.5% versus 12%, which were seen in the corresponding quarter. And Ramkrishna Forging also up 3% in trade, Neeraj.
Very interesting movers out there. Quick thoughts before we get back to Dhananjay Sinha. Just quick thoughts from our experts. Navneet mentioned Schneider Electric, 12.5% higher out there. But Amit, very quickly, you gave an index call to us. Any stock that's popping up on your screen the first 3 minutes of trade?
Well, I think Kaveri Seeds is one stock where we think there is upside potential of around 5 to 6%. The stock has been sustaining 600 quite convincingly, so that is a buy at these levels with a stop of 600. We're expecting target of 655.
Leave it at that. Thanks so much for joining in. Ruchit, same question to you. Anything that pops up on your screen, and if you are long in Gati, would you book profits here?
Yes, Neeraj, in Gati, definitely I think one should look to book profits if it's a trading position. Whether it closes above 112 resistance, that needs to be seen. So one can look to book profits here, and if it gives a closing above 112, then one can again relook and take a fresh call on that. And as far as some other stocks are concerned, Neeraj, I think OMCs one should watch out for some sort of pullback move in today's trading session. Specifically HPCL, the stock about 288 certainly seems good for a pullback move to 304, 305. So one can go long on HPCL at current levels with stop below 275 for target around 300 to 305.
Okay, thanks a lot, Ruchit, for joining us and taking us through your technical views on the markets. Well, clearly it is the PSU banking space which is buzzing in today's session. The Nifty PSU banking index is the top sectoral gainer as we speak. That's up nearly 3.5% right now, almost 4% higher, at least just in the starting 5 minutes of trade. Dhananjay, I want to take your view on the cement pack. We had JK Cement, which came out with the numbers. The higher petcoke prices and also diesel prices have been impacting the operating performance of a lot of these companies. We've got Shree Cement, which will be coming out with the numbers, but some bit of outperformance was seen for, companies like ACC Ambuja, and there is news that GST on cement could be lowered from 28% to 18%. No verification there, but just a buzz in the market. Are you revisiting this space considering the stocks were beaten down in the last 6 months?
Yeah, I think we were ahead of the market in in identifying the weakness out there, largely on the pricing power side. So I think that correction has happened, and more recently we've said that after the correction, stocks such as ACC and all look good. But I think in our preview for the quarter, we have highlighted that there is a considerable decline in the EBITDA per ton for the cement sector. For our coverage universe, the aggregate decline is roughly about 18 to 19%. So I think the pricing pressure is definitely there, coming from rising costs, especially the fuel cost. So I think all those things are there. I think overall the volume growth is reasonably good. It's not not so much of concern, but I think the pricing part is something we'll have to see. I think it will be another couple of quarters where we see the pricing part emerging. We are hopeful that there will be a turnaround there, but we'll have to wait and watch. But nevertheless, after the correction, there are certain stocks that one can pick up, and one of them we have actually highlighted.
Okay, that's about the cement pack. Dhananjay, your reaction on the Economic Times report, because of which we've seen gains for the second straight day for a company like Gati. In case if this transaction takes place where TVS Logistics acquire promoter holding of nearly 23 to 24%, and it is suggesting a premium because the total market cap is nearly 1100 crore of this company, and only for promoter holding they're looking to pay around 1500 crore. This is as per Economic Times report, but if this takes place, what's your view in the entire logistics space, and if this transaction takes place, do you see more consolidation taking place in the logistics sector?
So the thing is that this stock is not under coverage, so I'll not be able to make any substantive comment on that.
Okay, no problem on that front, but let's talk about Axis Bank. I'm presuming that should be under your coverage. The numbers are due to come out today. Any expectations from this one?
So I think, as far as the lending growth is concerned, we have seen that in ICICI Bank there is a sort of an uptick out there. I think key thing to watch is watch will be how they sort of treat the mark-to-market impact of rising yield curve, whether they do it in this quarter or do they amortize it over the next 4 quarters. I think as far as ICICI Bank is concerned, they have sort of taken a cumulative adjustment in the first quarter. So I suppose that will be something that will be watched. I think as far as the asset quality and credit cost is concerned, I think there again we'll have to see whether there is a lingering impact of the last quarter or not, and whether there is a deviation as far as the NPAs are concerned. So I think these are the things that will be watched for. I think as far as the overall private lending pack is concerned, we are far more constructive on ICICI Bank, both with respect to the results and also the message that we got from the management and whatever they are doing with respect to the cleansing of the balance sheet. So I think from a cyclical growth standpoint, we are more constructive on ICICI Bank and Federal Bank as well.
Interesting. Federal Bank as well. By the way, SBI is up about 3.5%. But Federal Bank, that brings me arguably to my next question, Dhananjay. Pardon me for making it a banking discussion of sorts, but what RBL, Federal, DCB to an extent have shown that the performances are chalk and cheese in that mid-sized banking space. So RBL probably a lot larger than the other two that I spoke about. Would you be constructive on that whole space at large? Because earlier the conversation always was that the larger banks will take a larger pie of the business and therefore bet on them. Do these, the federal banks, the DCBs, the RBLs, provide value at a good price?
It does. I think with respect to the Federal Bank, the core issue was with respect to the asset quality. There was a deterioration earlier on, and I think the prices corrected quite sharply. I think somewhere around 125 was the peak, and it corrected to almost like 80, 85. And see, the thing is, the concern over there was that they have not been able to deliver on the ROE strongly, so which was actually stuck somewhere in the region of 8 to 9%, and the expectation was that it will go up to 12 to 13%. So that has been sort of been elusive. And in the fourth quarter last year, we saw further correction in the margin. So the credit cost alongside you had this compression in margins. So I think our view has been that as the bank is able to continue with a strong lending growth that they have shown in the first quarter this year, I think it is in excess of 20%. And if the rate cycle is moving on the upside, and they have a very good retail book, I think they have roughly about 95% retail deposit as the total deposit. I think their ability to actually expand on the lending side, especially on the MSME and also corporate book, they have been able to grow. I think all that bodes well in a rising rate scenario. So their margins will expand, and hence this whole anticipation of expanding margins and ROE. Margin has been still stuck up something like 3.1 or thereabout. So it is possible that might actually expand, and that should translate into better ROE. So this whole concern on ROE that this bank has actually been going through can actually turn around. So I think that you might be at an inflection point. Maybe in next couple of quarters that might be visible. I haven't studied other banks, but DCB is again very sort of granularly diversified. So I think in a rising credit growth scenario, they might actually do better going forward.
Very interesting. Dhananjay, do you have any view on the the other financial names? The Equitas and the Ujjivans, the numbers have looked. I mean, the last 4 quarters they have looked kind of a mixed bag. They've missed out on certain counts, done well on certain counts, trying to bring the cost-to-income ratios lower. Somebody on the other day was talking about differentiated lenders like Muthoot Capital as well. Yes, they're tiny toons compared to probably the larger universe that you guys at Emkay follow. But are you positive on this space at large?
So I think the way I look at it is that I would want to prefer these small banks who are trying to build sort of some kind of protection as far as the cost of fund is concerned, because our view has been that costs will rise. So I think some of these banks have been able to make a strong inroad in building CASA. I think Equitas has been fairly active on that, though we don't have that under coverage. But I'm fairly constructive on such companies who have actually been trying to strengthen their retail franchise. So I think that's how I look at it. So better ALM is something that I would look at, notwithstanding the fact that these small banks have their own niche and they can actually grow fast. So I am constructive on specific companies rather than as a general theme.
Okay. Just want to mark India Volatility Index because we're trading around the all-time high levels. VIX has also surged nearly 5%. It's trading very close to the mark of 13, so keep an eye on that one. And besides that, some individual stocks, for example, Thyrocare, that's seen good gains in today's session. It's up almost 4 to 5%. Remember, on 4th August, company would be considering a buyback. 620 for this one. And you've also got RITES. Remember, the stock was up 18% on Friday, and this morning we've seen another 6 to 7% gains coming out. The earnings come out today, and this will probably be the first quarterly earning that they report post their listing on 2nd July. So just keep an eye on all these stocks, and also something like GAIL among the Nifty constituents that's moved higher in trade, and also Indiabulls Housing Finance. Dhananjay, I don't know if you have any coverage on the aviation stocks, but we've got Indigo, which will be coming out with the numbers. Any expectation, any coverage? Because the numbers are expected to be muted because of higher ATF prices in the first quarter.
No, we don't have that coverage actually, so I will not be able to speak on that.
No problem. And what about the other stocks in the oil and gas space? For example, ONGC, GAIL, the oil marketing companies have been doing pretty well in today's session. What's the top pick in this sector?
So I think in the oil sector we are fairly constructive on Reliance. I think the Reliance results have been pretty solid. In the petchem segment has reported a positive surprise, and we think that can continue over the next several quarters. Reliance Jio has actually shown a pretty strong momentum with respect to subscription addition, etc. ARPU has been fairly stable. Overall, I think we are of the view that you might actually see positive cash flow happening in financial year 2020. We are aware that there is considerable amount of investment related outflow that is happening this year, but we think that so we are constructive on the business trajectory going forward. So I think, so we have sort of we have put out a positive note on the results on the company as an aggregate between telecom and the petrochemical segment.
We've seen the contribution, from the petchem business towards the EBIT going higher in the last few quarters. Dhananjay, appreciate you joining us this morning and taking us through your views in the markets. Well, that was Dhananjay Sinha of Emkay. Global markets opened at fresh highs for Nifty, Bank Nifty, and also for Sensex. Mid-cap indices are also catching up in trade, and a lot of stocks to keep an eye on. But we'll take a quick break on that note. On the other side, we discuss the commodity and pricing pressures cropping up in the auto industries with Mahantesh of SBICap Securities, and we'll also decode June quarter earnings with HK Raghavan of Equitas Holdings and Anand Deshpande of Persistent Systems. Stay tuned.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. Here with us on Indian Open. Now, automakers have maybe little to complain about monthly sales, but what could topple the apple cart is the fierce competition and therefore discounts. One such area that's bracing up for some serious competition is the entry two-wheeler segment, with Bajaj looking to take on Hero MotoCorp on its own turf. Now, lots spoken about, but lots more to discuss as well. What do we make of the situation? How does one play the auto stocks? That's the most important thing after the correction that we've already seen. Let's ask someone who's now been tracking this space for a really long time. Mahantesh Sabarad, Head of Retail Research at SBICap Securities, does a lot more beyond autos. But right now, we'll try and keep this conversation around autos. Mahantesh, good morning. Many thanks for joining in. Appreciate your time. You know, that's the key question that I've been thinking about for the last 3 days, with Bajaj, Hero, as well as TVS. Dropping to near about their 52-week lows, while the monthly sales numbers for autos by and large seem to be okay. Now, what should an average investor do when he's looking at this pack? Let's start off with the two-wheelers first.
So basically the average investor shouldn't really panic because these are finally good stocks. Automobile stocks generally are high ROE, ROC generating companies, and they also generate a huge amount of free cash flow. So within that auto space, two-wheeler space also have the same characteristic. In fact, the ROCs are far stronger, and the kind of cash balances that they sit on is far too large. So therefore, whenever the stocks react downwards, it's the time to buy for retail investors. That's what I would generally advise, and general investors as well.
What do you make of this commentary though, Mahantesh? Would you believe that over the next couple of, or maybe the next, not couple of years, but the next 18 months, because of this competition that Bajaj Auto spoke about, their margins could drop down, and as a result, maybe Hero's margins and maybe TVS margins could also stay under pressure?
There is a lot of buzz about this competitive pressure building up, and there is some evidence of that has been seen in the first quarter results in terms of margins being compressed. But how long or how sustainable this price war and competitive pressure remains is something we are not sure about. We do think that this will be for some period of time, but won't be for extended duration, and therefore there is value that can accrue into the stocks. The competitive pressure may drop the margins for 1 or 2 quarters, but not really more.
Okay, interesting. What about the non-two-wheeler space as well, Mahantesh? Because we've seen tractor companies fly through, zoom through in first quarter, but if the Escort's commentary was to be believed, they had mentioned that while the first quarter sales numbers will look very, very buoyant, the average for the year was probably just about double digits or thereabouts. Therefore, which means that there could be some downticks in growth numbers in the quarters ahead. Let's start off with the tractor companies. How do you play them? I mean, is there value out there, or would you believe that being the third or the fourth year of an upcycle, we might be nearing, say, the top of sorts?
So tractor industry is known to be cyclical, and therefore what you have correctly identified in terms of the sales being on an upcycle right now would naturally mean that the down cycle is going to come. This down cycle probably will be seen after this monsoon season and festival season is over, and therefore the prospects for tractor companies ahead in terms of volume growth doesn't look all that great. But having said that, what should also be remembered here is that we have gradually infrastructure sectors picking up. Much of the tractor sales, while they go for core agriculture use, some of the tractors are also deployed for infrastructure activity, construction sites, etc. And therefore, there could be some solace available in terms of volumes for tractor companies. So how we play these companies is that so long as they're delivering steady state margins, volume shouldn't be a concern, and therefore stocks should maintain their valuation levels being steady ahead, and therefore the stock should steadily rise.
Mahantesh, I was looking at the YTD performance of the auto pack, and what may come as a surprise to a lot of viewers, save for 4 names, which include Mahindra and Mahindra amongst others. There are very few which have given returns. So there is Apollo, MRF, Exide and M&M are the only 4 stocks YTD in the auto space that have given positive returns. What's not done well, Mahantesh, is on a YTD or a 1-year basis are the Tamo twins. Now, is the pain in the price, or will it remain in the price for a really long period of time, and therefore we could see a time correction in addition to the price correction that we've already seen in Tata Motors? What is your best thought?
So, see, the automobile companies have not given good returns. So, reason number 1 is, which you didn't identify while you identified the others, is that Maruti, which had reached of almost 10,000 in terms of its stock price level, really didn't perform thereafter because the valuation looked overbloated at point in time. But coming to your specific question on Tata Motors, there is a concern about the overall JLR business pie of the Tata Motor Group. And there we are seeing high capex levels. They are restructuring their balance sheet. They are taking a huge amount of depreciation charge. And as we go forward, the guidance that is being given for JLR is that it will be a business which will not generate free cash flows. These are not good signs for any business, let alone JLR. So we think that as time progresses, unless this whole capex phenomena is relegated to something which is manageable levels, we will not see the stock really perform.
Okay, Mahantesh, really appreciate you joining. Would love to chat more, but just slightly running short of time. But thanks so much for joining in today and giving us your thoughts.
Thank you.
Hello and welcome to earnings special edition on Bloomberg Quint. Equitas Holdings reported strong growth in advances while net profits doubled on a year-on-year basis. Joining us on the phone line is HK and Raghavan, President Inclusive and Outreach Banking for Equitas Holdings. Thank you so much for joining us on Bloomberg Quint, sir. So first up, my question to you is there has been a strong, good growth in advances. Firstly, can you tell us what has led to the growth and which segment contributed the most, be it banking, vehicle financing, corporate or mid-sized loan segment?
I think the overall, if you look at it, the asset size advances have grown by 27%, and this has led with a strong growth in loans against property, which is around year on year 70%. And also, if you look at vehicle finance, also clocked a good advances around 22%, and SME has also grown. So overall, all the segments have actually, done a very good growth. And microfinance, for the first time sequentially, has registered a growth of 6%. So if you look at microfinance, it was going down, and this quarter or last quarter has increased by 6%. So overall, there has been a robust demand in terms of growth. And all the new products that we had launched in agri loans, loan against gold, and business loans have done extremely well, and they have contributed to this 15% to the growth. So I think overall, all product segments have done extremely well.
All right, so microfinance portfolio looks almost cleansed. Can you update us on the banking transition, also the mix between your microfinance and non-microfinance AUM?
The overall microfinance now stands contributing around 27% to the overall portfolio, and as I was telling you, it has grown by 6%. So the drop in microfinance portfolio has been halted, and then it has started growing because markets are also pretty looking up as of now. And the other non-microfinance products are going roughly around 50%. And the banking transition coming to the deposits, if you look at it, we have added close to 1,000 crores compared to the previous quarter. The deposit stands at 5,700 crores, and the CASA has also grown from 1,638 to 1,800 plus crores. So now the deposits almost contribute 49% to the total borrowing, and this actually shows that the transition is complete, and now the focus on efficiencies are there, and you can see this tracking of this growth in CASA and then deposit, which ultimately will result in a very positive impact of borrowing cost. So I think the things are also pretty good on the liability side, branch banking side.
Sure. Sir, how much more can you improve on your cost to income ratio, as we are seeing that the NIMs are falling on a sequential basis? Can you tell us a timeline when will it stabilize?
I think cost to income ratio, I think you should appreciate that we were at 76%, we have reduced by 1%. And as you are aware, the June quarter is a season for bonus and increments. So as our manpower cost is almost 60% of your operating cost, and with these expenses, it has grown by 6%, and mostly towards your salaries and then bonuses. And further expenses are not going to be there because we are not going to expand in terms of branches. There's no investments in terms of new investments in terms of branches. We expect the operating cost to be at a similar level for the next couple of quarters. So hence, by by this year end, we should always we should be able to look around, say, 71% of cost to income ratio. And coming to your next question, which is NIM. NIM was around 8%, and it has followed. It is now at 7.2%. Two things. One is that if you look at the spreads, our overall spreads, which is 11.4% to 11.2%. So there's not much drop in terms of spreads. That means what we are doing is that our yields are holding on despite the change in the product mix. We are holding on to the spreads. NIM, yes, we had some advances. We had advanced certain borrowings because the cost of funds is going up. The overall spreads are pretty good, and then it is holding on.
Sure. Sir, can you also discuss collection trends in key states like Tamil Nadu, Maharashtra and Karnataka?
I think the collection, if you look at it, I think the Tamil Nadu, we never had problems. If you are asking pertaining to the microfinance, or you are talking about the overall collections that you want us to talk about?
So the collection trends, I'm talking about the key collection trends in states like Tamil Nadu, Maharashtra and Karnataka.
Okay. If you look at it, as far as I try to kind of talk about microfinance, because that's where the stress was there in terms of collections, especially Karnataka and then Maharashtra. The collections in Maharashtra and microfinance, which has dropped down to around about 72%, a year back, today is back at 84%. So that means basically you are looking at clients coming back and started repaying. Similarly in Karnataka, which was at 76%, has also moved to 84%. And Tamil Nadu has been always good, so there's not much of an impact as far as Tamil Nadu is concerned. It's very healthy. So we are seeing definitely in microfinance the collection trends improving a lot, especially these stressed states.
And so my last question to you is if you could give us some guidance on disbursements and loan growth for financial year 2019.
2019 would be very difficult. Probably we are expecting the advances growth for, so let us say, year 19. We should be looking at around about 40% growth, and almost we are, if you look at our sequential growths, we are almost all there. I think we should be able to kind of grow our assets by advances by 40%.
All right, sir. It was a pleasure speaking to you. Thank you for speaking to Bloomberg Quint. So that was the management of Equitas Holdings.
Hello and welcome. Well, it's been a very strong quarter for Persistent Systems, and we have seen substantial growth. And in fact, when it comes to its headline numbers, that is the top line, bottom line, as well as the margins, they're well ahead of street expectations and the Bloomberg consensus. To take us through the quarter and what we can expect going forward, we have Dr. Anand Deshpande of Persistent Systems joining us. Dr. Deshpande, good morning, and thank you so much for joining us this morning. Let me just start off by the seasonality aspect of this quarter. We have seen strength come in when I compare this quarter compared to the last on a sequential basis. To what extent has seasonality played when it comes to growth this quarter?
Okay, so let me first give you an overview of the total numbers of $123.6 million in terms of the dollar revenue for the quarter and 834.28 crores in terms of the rupee revenue, which is a 5.7% Q-on-Q on the dollar terms and 10.9% in terms of the rupee numbers. Now, if I were to look at specifically what happened in this particular quarter, one of the big good wins for us was the IBM reseller business, where we were able to get substantial business in Europe, and that contributed significantly to this quarter's growth. Now, to put a little bit of color on this particular business that we have started in January, we have added significantly to our European sales team, and we are doing reselling of some of the products that we have been working with at IBM in the market, and this one contributed a reasonable revenue stream for this particular quarter in this from the European business. So that's why you would see the European numbers actually going up as well. The IP numbers have gone up as a reason of this particular growth in this particular market. In terms of the seasonality, there is some seasonality that is associated with Q2, Q4 calendar where our partners tend to have better quarters as compared to the other ones. So that certainly played a little bit into this market for this particular quarter. But I think overall we are seeing very good traction on both the pipeline for healthcare and also in the financial services area. So we do expect fairly strong growth in other markets and other businesses in the next few quarters.
Right. Dr. Deshpande, in the previous quarter, when we had spoken about business, you had suggested that there were certain licenses, planned license sales, which were pushed forward from the fourth quarter of last year to the first quarter of this year. Can you tell us a little more about that and how that has panned out?
No, so some of the business that, it's kind of hard to say what exactly moved, but the growth in this quarter, a lot of it has been contributed by license sales that happened specifically in this particular quarter. So definitely some of those would have come in this quarter as well.
Dr. Deshpande,
but this is an ongoing process. We have some which will always keep shifting, and some new ones have to keep getting added. But you have to look at this business on a yearly basis rather than specifically on a quarterly basis.
Fair enough. So I understand that. So in the previous quarter, you'd also suggested that the legacy businesses from your existing customers will provide some challenges with respect to growth. Can you give us any update or details with respect to how Persistent Systems is now tackling this, and any updates where we can see this going forward?
Right. So over the last few quarters, as I have mentioned before, we are starting to see a robust pipeline in some of the newer lines of business, specifically around healthcare and financial services, where we are trying to sell differently in some sense. So instead of providing headcount for projects, we have made investments in technology solutions that are starting to generate returns. While this growth has been going on, there has been pressure on the existing projects where customers want us to either reduce costs or reduce the teams, specifically because the effort required for the same work is going down. So this is a balancing act on an ongoing basis. But what I'm very positive about, or what excites us, is the fact that there is enough newer business in the pipeline that is getting closed. And most of the new business that we are getting is not the staffing business, but it's definitely related to technology investments that we have made. So those investments should play well in the long term. They have a little bit of do a project, show me a point of view, show me a POC, and then let's go implement on a stronger level. But these are typically how digital projects are going to keep happening. So there's what we call a flywheel effect. So you start small and you kind of build on it as you go along. So many of these will start small, but eventually they will sustain to large and reasonable business opportunities for us.
Right. So, Dr. Deshpande, from what I read when it comes to analyst reports is that, and they also corroborate the fact that you do have a very strong pipeline. My question then is that when it comes to addressing the strong pipeline, there are some estimates that a lot of it will be aided by inorganic growth. So can you tell us a little more about where can this bulk come through acquisitions, and how you're addressing the strong pipeline, or is Persistent Systems as it is good to go and deal with the strong pipeline that you have right now?
No, so most of the strong pipeline or the activities that we are doing, what I have referred to so far, are all organic growth opportunities. That said, we do have about $123 million or about 1,200 crores in the balance sheet as cash on hand. And we do plan to use some of it during this year to try to see if we can acquire certain companies or businesses that can help us grow the business. More specifically, there are three vectors in which we are looking at newer acquisitions, which would be smaller companies, but with a very specific focus in these three areas. So one is relating to industry segments, and more specifically, we are interested in the healthcare area, where we see a tremendous opportunity in terms of the market transforming and the positioning that we have had, especially with our partnership with hospital systems such as Partners Healthcare and other areas there. The second vector that we are focusing around is technology. In there, we see a lot of activity around data pipelines, warehousing, big data related data lakes, and then all of this leading into machine learning and being able to analyze data better. So the insights piece of our business, and we have invested in products such as Share Insights to help us go into that area. And the third vector, of course, we are looking at is to diversify in other geographies beyond the North American one. So we have, as you would have noticed, we have more than 83% of our revenues today come from North America, mainly the United States. And the plan is to see how to acquire businesses that give us a better footprint in Europe or in other parts of the world.
Right. Dr. Deshpande, just a couple more questions. Can you tell us a little more about Europe, because you've spoken briefly about it, about the kind of trends that you're witnessing there, the kind of conversations that you're having with clients in Europe at this point in time?
Correct. So, we are leveraging the industrial market in Europe to the partnership that we have with our largest customer. And that's really the focus that we are pushing in the European market. Most of this activity is related to the German, French, and the continental Europe, in addition to the UK areas, which are all the developed markets where Industry 4.0 is certainly a big area that people are working on. So our European investments have been predominantly in the sales side to start with. We have added certain capacity in Europe through the acquisition of parks that we made last year, and we are trying to strengthen that to grow our local footprint there. But by and large, the investments this time around have been start with sales, sell more, and then see how to deliver some of those activities. So that's starting to show some results this quarter. But I do expect through the year we will increase our European presence and our European business significantly.
Right, so and finally, so we continue to see softness in the accelerates, segment. Can you tell us a little more about what's going on here?
Correct. So, some of our existing businesses that we were involved in, which had which had an end of life planned in it, they reached a point where they were not profitable in terms of the cost and the revenue stream that we were getting in. So specifically that one we had regarding our cloud and other businesses, we have exited some of those which have helped in doing some cost cutting along those. So I would think that these are the bottom numbers for the Accelerate business. We have some of the newer technologies, specifically around cloud, Sentient, which is the endpoint management, and also Share Insights, which is our analytics business. Hopefully they'll start to kick in and contribute to revenue growth in the Accelerate business. So see, again, this is a work in progress for us. There are many changes that are happening in the market. There are multiple areas in which we are focusing on, and it's hard to get all of them to fire at the same time. But hopefully, if we can get some balanced activity, you should see some growth from us in the next few quarters.
Right, Dr. Deshpande, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's numbers as well as the outlook for the company.
Thank you very much.